Let's do it.
Okay. Welcome back to another episode of Talking Shit. Shit, of course, is an acronym for Straight Health Insurance Talk. My name is Matt Allen, and with me is Aaron Miller.
Howdy.
All right, Aaron, what are we talking about today?
Well, today I want to discuss one of the things that we run across fairly frequently, and that's that people have preconceived notions about plan quality based on the brand that is offering that plan. And I think there's a misconception, just a misunderstanding of, hey, the carrier or the company, that brand name that doesn't always indicate the plan quality.
Yeah, that's very true. Oftentimes in my career, I've noticed most people are comfortable with a larger insurance company, but you're also going to come with certain downfalls of that. So if I worked at a big company and got my health insurance through that company, I would probably have what we call in the industry a BUCA plan. That's B-U-C-A. It's going to stand for Blue Cross Blue Shield, United Healthcare, Cigna, or Aetna. So that's a BUCA. And those are the big brand names. And most people, because they've had a good experience with their work insurance or because they've heard of these plans due to their marketing budgets, they equate that with high quality insurance just across the board. But what's important to remember is these BUCA type companies, these massive national conglomerates, they have many different tiers of quality of plan. And so just because I was in the pipe fitter union for 20 years and I had a great Blue Cross Blue Shield PPO doesn't mean when I retire at 55, I should go straight to Blue Cross Blue Shield to get another plan, because that same plan that the union negotiated for the pipe fitters is not going to be available to you as an individual. It's going to be a much lower quality plan. It likely won't be a PPO. It'll likely have a higher deductible. And so by trying to have like brand loyalty in health insurance, it really doesn't make any sense. You're going to potentially put yourself into a very adverse situation. We have people here in Indiana who have Blue Cross Blue Shield through their job. They retire. They go straight to Blue Cross Blue Shield on the Marketplace, and none of their doctors take the plan. They are confusing and conflating my Anthem group plan with my Anthem individual plan. They're going to work the same way. They do not.
Yeah. And I think it's, I've heard of Aetna. Oh, my doctor takes Blue Cross Blue Shield. I have all of these, preconceived notions that, just because, it's the same company, it's the same plan. And, it even gets down to the network and all the other things that comprise the plan. Again, what are all the things that make a plan different from one another? So it's network, right? Network is a big one.
Well, a lot of people don't realize that the same company can have a different network within the same company.
Yeah.
And so when they go company to company, they just try to match up premiums and deductibles and like, I just want the same plan that I had through my job. Well, it's not that easy anymore. Ever since the Affordable Care Act came out, it has sort of maladjusted this health insurance marketplace to kind of be a deteriorated landscape. And what I mean by that is Anthem Blue Cross Blue Shield will offer these group plans. What they are allowed to do within these group plans, if it's something called a self-funded or a level-funded, is to assess the risk of insuring the group, and that will allow them to control the costs. And then year over year, they can examine the health profile of the group and potentially raise the rates or lower the rates. When we're talking about an individual plan through Anthem Blue Cross Blue Shield, it could be an HMO on the Marketplace, it could be an EPO on the Marketplace, it could be a PPO on the Marketplace in certain states, and they had the audacity to call one a POS on the Marketplace. Anthem offers
a piece of shit?
Exactly like a piece of shit. How that got through the marketing department of Blue Cross Blue Shield, I have no idea, but they actually have a network called a POS. It does stand for point of service, but all of these networks are going to be different than the one that you're used to. So just going apples to apples, work plan to individual plan, it doesn't work anymore. You've got to re-examine. Just because your doctor has taken your Blue Cross Blue Shield PPO doesn't mean they're going to take your Blue Cross Blue Shield POS. It just simply isn't. And it's all based about the reimbursement rates that the insurance company is going to give. And you might think, well, shouldn't those be unilateral across the board based on Blue Cross Blue Shield? It sure would be nice, but it's just simply not the case. They have many different networks, and the providers, physicians, healthcare facilities, whether or not they're in network or not, means whether they accept those reimbursement rates or not. And they're going to want to accept those high-quality PPO reimbursements rates, so lots of doctors take them. But those low-quality HMO reimbursement rates, EPO, POS reimbursement rates, a lot of doctors are like, we don't want to take that. So do they take Blue Cross Blue Shield? Yes, but which flavor is the real question.
Yeah, I think I saw that Aetna has 8 different networks that they kind of have spread out. And so someone's like, oh, I looked and my doctor takes Aetna.
Right. It'd be like saying, well, I drive a Honda, and you just assuming all Hondas are the same car. But you got the Odyssey, you got the Accord, you got the Civic, you got all the different types of Hondas. It's the same way with health insurance. Honda is to Blue Cross Blue Shield, and then the different cars are to the different networks. And so you really need to understand which one is going to work the best for you based on the medicines you take, where you live, what your zip code is, what your income is, what your health history is, who your doctors are. There's so many things that you should factor into the equation if you're going to be purchasing one of these individual plans.
Yeah. And so I've heard this come across last couple of weeks. PPOs, even on the individual side, people think PPO and automatically equate it to quality. But even a network designation of PPO on the individual side doesn't mean, hey, I have a work plan PPO.
No, not at all. So a lot of people want the PPO. What does that even stand for? Preferred Provider Organization. So what that means is if you have a plan that says PPO on it, there's an organization of providers that they prefer you go and see. And if you are going and seeing those preferred providers, you get a lower deductible. You get a lower copay. You get lower coinsurance. You pay less when you see those providers. But the best part about the PPO is even if you're seeing someone outside of that organization, termed out-of-network provider, these plans will still cover you. There's still benefit there. And what we typically have on a work plan is your deductible might double if you're outside the network. Your copay might double. Your coinsurance might get cut in half. It might be something like that, but they're still going to cover you. When we pivot to the individual marketplace and you're looking for a PPO plan, you better check those plan documents carefully. I had someone in Illinois on a Blue Cross Blue Shield PPO because that's what they had at their job. They sold their company. They went out onto their own, and he just called up Blue Cross Blue Shield and he said, hey, I had a Blue Cross Blue Shield PPO through my job. That's what I would like through you. The guy had enough money. He goes, why don't you make it a gold plan? He thought he was doing the best thing possible for his family.
Yeah.
The doctors that they go to up in Illinois at Northwestern, they take the Blue Cross Blue Shield PPO through his work. They are not in network with the Blue Cross Blue Shield PPO from the marketplace. So even the designation of PPO is different, whether it's work insurance or whether it's the individual. And what he didn't know, what we pulled back the curtain on, is he had an in-network deductible of $1,200. And that's what they told him when they sold it to him. His out-of-network deductible, $15,000 a person. $15,000. And the doctors that he wanted to go see were out of network. So was this plan really covering him outside the network? I guess by the letter of the law, yeah, $15,000 individual deductible per year per person. Is that really covering you? I don't really think so. And then the absolute worst part about this plan was the out-of-pocket maximum, if you were outside of the network, was unlimited. How is that covering you outside the network? So not only do I have a $15,000 deductible, but then I got to pay 50-50 if I'm outside the network. So on a $250,000 bill, I'm going to owe like $130,000. That's insanity.
Sounds like a gold plan.
I don't think that's really covering you outside the network. Maybe we need to do something a little bit different. So what we did in this guy's case is they were a healthy family. We cut their premium in half, moved them to a private individual plan where they truly could go anywhere they wanted, and they had a $5,000 max out of pocket. So there are options there, but don't think that it's apples to apples when you're buying individual plans based on your experience with group plans. They're very different.
Yeah. So you just touched on private plans, and no network restrictions is something that I've heard tossed around. What does that exactly mean in practice? Like you can just go see whoever you want, or do they still have a network?
So there are different types of these no network private plans, and there are pros and cons to them too. This isn't some sort of magic wand, silver bullet. Hey, we've solved health insurance. There's still some drawbacks to it, but in regards to the network, what we are meaning is with these private plans, there is a network. And that simply means if you choose a provider that is within that network, you will get that provider's discounted rate on your services before your benefits are applied. So you still get this little in-network negotiated discounted rate, and it's pretty nice. And the networks are pretty broad. But if you wanted to seek care outside of the network, and you said, I got a brain tumor, I want to go to the Mayo Clinic, I'm just going to go. Well, this plan's still going to cover you outside that network. It's just more similar to the work PPO, where they won't be able to guarantee a negotiated rate. They'll still try, but they won't be able to guarantee one. And so if you're outside the network, your benefits will still apply. It's just you may owe more. And these are situations and scenarios that we walk all of our clients through, and we make sure they're comfortable with it. Like, hey, if you do go outside the network, this is what you can expect, yada, yada, yada. But the benefits will apply anywhere because it's about the person. It's Matt Allen is insured by this. So if that happened to Matt Allen, regardless of where he is, Matt Allen gets this benefit. If he happens to be in the network, his benefit's going to go further. But if he's outside the network, he's still covered.
Got it. So, here in Indiana, we don't have any PPOs on the marketplace.
Ugh.
Right? It's HMO, EPO, POS. As far as, experience-wise, as far as people choosing those, do you, as professional 10 years in the business, have any preference between those three, or is it still, how would you break down the preference, who fits right into each type of plan? And I can tell you what ChatGPT told me each one of these was, if you'd like.
They told you, what did ChatGPT tell you?
POS is a hybrid of HMO plus PPO.
I mean, kind of.
EPO is more flexible than an HMO, but less flexible than a PPO.
Okay.
Yeah, it's just giving me some highlights. But
so what's the question then?
If Matt Allen had to get on a ACA Marketplace plan, which one of those gives you most comfort, or is that not even the right question?
So it's not necessarily a network designation that would give me the most comfort. And you can do this on a state-by-state basis by utilizing healthcare.gov, or we've got a Health Sherpa link we can share where you can go and shop. And they have these search tools where you can enter in providers or prescriptions, and you can see which of these ACA plans are in network with these providers. You can see which ones cover which drugs. It's really nice, actually. But you need to understand that is where your coverage ends. If they do not accept it, whether it's HMO, EPO, or even a POS, if your doctor isn't in network, that's going to be 100% out of your pocket, that type of care. So when you're asking me if Matt Allen has to be on one, that's okay. I can do that. I'd probably pick an Ambetter plan in the state of Indiana, which unfortunately is an HMO. But their HMO operates a little bit differently. HMO stands for Health Maintenance Organization. Your benefits only apply if you're in network. You do not have any coverage if you're outside the network. And the one thing that gets a lot of people hung up about the HMO is you always have to see your primary care physician before you can, get the referral to the specialist.
Got it.
With the Ambetter HMO, you don't need that referral. You can book straight with the specialist.
Oh.
But still, based on the type of plan, nationally, they required Ambetter to reclassify as an HMO. Ambetter was always an EPO, which stands for Exclusive Provider Organization, which a hallmark of EPO plans is not needing that referral. For some reason, Ambetter got kicked down to HMO status as opposed to EPO. I'm still not totally sure why, because it kind of operates as an EPO. But neither of these options have any coverage outside of the network. So if I had to be on one, I would choose one that had in-network the most hospital systems around where I live. So there are 5 major hospital systems in the state of Indiana. You've got Riverview, you've got OrthoIndy, IU Health, Community, and St. Vincent. And Ambetter is in network with all of them. So even though it's an HMO, If you're forcing my hand and I have to be on one, I would probably be on that plan. But I still wouldn't be comfortable enough if I just had that plan, because I then know I am relegated to only receiving medical treatment inside the network.
Yeah.
Well, what if I do want to go to the Cleveland Clinic? What if I do want to go to the Mayo Clinic? What if I'm on vacation and I break my leg? These plans are not going to cover me in those areas. And so what I'm going to always want to do if I ever get relegated to an HMO is add a supplemental piece to sort of wrap around this plan, that in case I were hospitalized, had a surgery, needed disease care, had an injury, emergency room, urgent care, whatever it is, these plans, these supplements can wrap around that HMO. And then anywhere that I need care for the larger medical expenses, whether I need it or I want it, is now covered with that supplement. And at my age, I'm 40, probably only adds, another $100 a month for that. Yeah. And I would want that peace of mind.
No, that makes sense. So someone out there who's stressing the EPO, POS, HMO, it's more about, hey, see who's in network, make sure your doctors are covered, your medications are covered. Outside of that, the preference should be just who has the largest network near you.
That's what I always prefer, because I think far too many people dial in their health insurance for what's going on right now with them. Mm-hmm. They want to make sure their doctor is covered and their prescription is covered. And I'm not trying to say that that's not important. I think that is important. That's where we start. That's always where we start. But we need to remember that the reason that we have insurance is for the unknown. It's for the unknown risk. The reason you have auto insurance isn't because you know you're going to get into an accident. It's in case you do. Same thing with homeowners, life insurance, disability insurance. Some people have pet insurance, which is just insane to me. But that's really why we have health insurance. Too many people want it to just dial into, well, I'm only ever going to go to this hospital. How do you know that? How do you know you're not going to want to go somewhere else? How do you know you're not going to get a diagnosis? How do you know you won't be on vacation and you got hit by a bus? Like, you just don't know these things. And so I always err on the side of, let's get that network as large as possible. And if we can somehow incorporate either a supplement or one of these no network health insurance plans that now I don't ever have to worry about the network, that's what I'm always going to recommend. But again, that's Matt Allen's comfort level. Right. That might not be Aaron Miller's comfort level or Susie Johnson's comfort level. You may be fine with the HMO. You may say, nope, I don't care about the out-of-network. And if they don't care, I don't care. That's fine, as long as they understand the situation.
Yeah. No, that makes sense. And I heard you talk about it a little bit earlier, but like the drug formularies are also different for these plans. Have you run across people who have enough medications to where no one plan covers all of them? Like,
yeah, I mean, just a couple times. Fortunately, the majority of people are on generic medications, which if you're still using your health insurance to pay for your generic medications, I'm going to strongly encourage you to look into things like GoodRx, Cost Plus Drugs. They can deliver the drugs straight to your door every 90 days if you're on just some sort of generic maintenance med, and it's way cheaper than running it through your insurance. But when we're talking about these brand name or specialty drugs, the ones that you see commercials for where people are singing and dancing and their life is so good because now they got this pill. If you're on one of those, you're going to really need to make sure when you're buying health insurance that that drug is included in your formulary, because that'll allow you to qualify for these discount cards and these copay cards, get it as little as $30 a month, whatever they say. It's got to be in the formulary. Some of these drugs do have programs where they will be able to give you that discount card if the drug is not in your formulary. So we've never really come up on a situation where unilaterally health insurance just won't work for someone.
I see.
We've been able to work, and for certain maladies, there's like 3 or 4 different brand names that you can use. And while people don't like to change their meds, and I'm never going to tell you, I'm not a medical professional. You take whatever the doctor tells you. That's not up to me to say. But a lot of people are willing to work with insurance just to make sure that it's covered. But I think something that kind of gets lost in the weeds, and this has only happened one time in a really bad way with one of my clients. The fact of the matter is the Affordable Care Act, when you get on one of those plans, one of the 10 essential benefits that's included in every plan is that they will cover pre-existing conditions right away. There can't be any discrimination, waiting periods, exclusions, price gouging if you're sick. And I think that's great. But what a lot of people don't realize is these HMO, EPO, POS, they're trying to control their costs as much as possible. And so if you get diagnosed with something, some sort of malady that has a treatment that can be used that's a generic drug, they're going to ask you to try that first because it's lower cost to them before you get to the specialty drug. And so oftentimes when people come from a work plan and they're on a specialty drug and they go to the Affordable Care Act, they'll say, oh, you have emphysema and you're on this $800 a month drug. I'm just picking something random.
Sure.
A lot of times that ACA will say, well, of course we're going to cover your emphysema. Of course we'll cover your emphysema drugs, but have you tried this $4 generic first? Instead of immediately authorizing this $800 a month one. And you may say, oh yeah, I've tried that. And I've tried this $10 a month generic, and I've tried this $30 a month generic, but really the $800 a month is the only one that works for me. I've had someone have to go back through all that rigmarole, even when that $800 a month one was in the ACA's formulary. It was covered under it.
Really?
They still wouldn't approve and give the pre-authorization until they had documented proof that they tried and failed with the generics. How absurd is that?
Yeah.
And so what I really want to resonate with people is just because they're going to cover your pre-existing conditions, I'm not saying they won't, but they're going to cover it in the way that they want to cover it. This is more a managed care system when you get to the Affordable Care Act. Now, the majority of people, they're on generics. This isn't going to hamstring any of your treatment. If your specialist is in network and you're taking a drug, this is not some sort of horror story. I've been doing this 10 years, and that happened in an extreme case one time. This is not a common occurrence, but it can be. And so what I just want to encourage people to do is to really take ownership of their health, take ownership of the new insurance plan that they're going to be on, ask for help, seek guidance, make sure that you're going to have a seamless transition when you get off the work plan and go to an individual plan, especially if you're taking one of those name brand drugs.
Yeah. That's crazy.
Mm-hmm. Very.
Yeah, so it's managed care, see your primary care before you can see a specialist in some cases. I mean, you got to go through their chain of command.
Which is what most people hate. On the PPO, that isn't really a thing on your work PPO. But when you get to the individual plan, if you're going with a marketplace plan, I need to hammer that home. Yeah. If you're relegated to a marketplace plan due to pre-existing conditions or because you get a large tax credit due to your income, that's what you need to be on the lookout. But if you're on one of these no-network plans, it's not about getting something pre-authorized or pre-approved. It's Matt needed an appendectomy, so Matt's covered for an appendectomy wherever Matt had an appendectomy. It's very nice. They don't need to get pre-authorization to remove it and to stitch me back up. They just do what needs to get done, and the insurance will cover it. That's the freedom of that. Now, it does come with its own warts. We can get into that if we want, but the main horror stories that I've seen about pre-authorization and managed care, it's all coming from the marketplace.
Yeah. No, that makes sense. One other interesting thing I think gets talked about a little bit, and this isn't necessarily in plan design, but more in, I guess, future planning when it comes to what you're picking, is the risk pool that you're getting into with each one of these plans. So like a work plan, for example, you're going to have all the people in your company, potentially their spouses, their children, on that work plan in that risk pool. And then we have the risk pool of the ACA and the risk pool of the private. So how should people be thinking about, I mean, if you can avoid price hikes, you want to, right? If you're thinking future me getting health insurance.
So you're wondering about just the risk pools in general of these different type of programs?
It feels like it's not a plan design, so to say. It feels like it's still an element of the plan that can help people choose where to go? Like if someone could qualify for these private underwritten plans, I feel like risk pools could be a factor that would allow them to go that direction instead of choosing the ACA.
So I wouldn't put an overwhelming weight in your decision on the risk pool, but I think it's something you should understand, at least. A lot of people forget that insurance in general, just as a product, it's a risk-based product. You know, when you get your life insurance, they want you to do a physical, or some of the more extreme ones will have you running on a treadmill, or a nurse will come out to the house and take your blood. Dude, if you want like 10 million, they're gonna check everything.
Yeah.
You're peeing in a cup, you're gonna be doing all the stuff. Because they want to understand the risk. And that's how they accurately give you the premium, is they look at their mortality tables and they look at your health profile and all that. So insurance is a risk-based product, and that allows them to be profitable and you to still benefit from having the coverage. When we start removing risk, or we get into riskier situations, that's where we can see a lot of price fluctuation, a lot of increases over time. The Affordable Care Act plans, the Marketplace plans, they go up more often and more regularly than the non-Marketplace, no-network private insurance plans. And the reason being is the Marketplace cannot control who signs up for a Marketplace plan. Everybody's accepted day one, no questions asked. So some people have been taking advantage of this. Some people have been waiting till open enrollment periods to get a whole bunch of medical work done, and then they cancel the plan. They're not paying into the risk pool. But when you have this health insurance option available where sick people can get on it and get all their treatment taken care of, all their medications taken care of, and basically cost the insurance company more money than the premium they're paying in, you may think, oh, that's a win for the little guy. Oh, yeah, stick it to the health insurance companies. And I'm not too far off from that. But if everyone's doing that, then the health insurance company isn't making money anymore. This is a riskier pool. You have a unhealthier pool of people, because this is the only place the unhealthy people can go who are filing the majority of their claims.
Right.
If this pool is unhealthier on average and filing more claims on average than the American population, well, then the prices are just going to continue to go up. The deductibles are going to continue to go up. So this risk pool is a very high risk, and mostly because the insurance company can't calculate the risk to insure these people when they're coming in. This would be like if we were issuing life insurance to everybody and nobody had to take any blood work. They didn't look at your BMI. They didn't even ask, how old you were. Right. It doesn't make sense. It wouldn't work. And so we're seeing the effects of that in the Affordable Care Act Marketplace. Now, if you instead look to a group plan, like you were talking about, well, the risk pool, it's just your group. That's what it is. It's the amount of people who are on that plan. So year over year, if you have an unhealthy group that had a whole bunch of claims and the health insurance company lost money, they now have grounds and reason to say, hey, here's your 28% rate increase.
Yeah.
Here's our offer. Because you're a risky group. We lost money on you. If you want to stay with us, you got to pay us more money, because we're expecting you to continue to be riskier. Now, the larger your group is, some of these larger companies who've got thousands of people, tens of thousands of people on their plan, well, then the risk is very low because it's super spread out. You could have 100 people have a really bad year health-wise, but then you still have 9,900 who didn't really use the health insurance. Okay, well, that's going to flatten out the risk. Now the premiums will be steadier. But when you've got a group of 10 at, Chuck's Auto Shop, and one guy had a heart attack and one guy's wife had breast cancer, well, Chuck's Auto Shop is going to get an 80% rate increase. And they're going to say, health insurance sucks. Well, it's because your risk pool. It's because your risk pool got blown up. Okay? And there are things that we can do about that. And if you're Chuck's Auto Shop, I'd love to talk to you about what that is. But then if we look even a step further at these private plans, these no-network health insurance plans, the plan that I'm on, the plan that you're on, okay, these risk pools are steadier, because one of the hallmarks of these risk pools is that they won't cover pre-existing conditions in the first 12 months. Now, that's a huge drawback to a lot of people. That's just going to be a non-starter for a lot of people. And that is what protects that risk pool. Because if you can't handle that for the first 12 months, if you can't wait 12 months for the pre-existing to be covered, you're never going to sign up for this. You're never going to be on that plan. And so inherently, this is a healthier group of people who are on this plan. And that helps lower the risk, flatten the risk out. So if you are between, sort of to go back to your original point, a marketplace plan and a private plan, a non-marketplace plan, you may err more towards the non-marketplace plan. You may err towards the non-marketplace plan because you like the slower, steadier rate increases because the risk pool is more controlled. Because you're only in a risk pool on these plans with everybody else who is on a risk pool with these plans. So it keeps your costs lower, less premium hikes as opposed to the ACA, which year over year, I mean, we saw in Indiana last year was a 19% across the board rate increase on the ACA. That's 1 year. And it's because these companies were losing so much money. They then get to file each year their rate increases that they want with the Department of Insurance. Then the Department of Insurance has to approve or deny it. And they approved 19%.
Wow. Mm-hmm. Do you remember what it was the year before that?
A couple of the carriers went down by like 0.5%, and then others went up, 8-9%, because they're all in their little siloed risk pools. So it's just year over year. It just depends on what happens with claims.
Got it. Mm-hmm. Interesting. So I think the big overarching message here is don't just go by the company. Dig in, make sure that what you need covered is covered, first and foremost, and then try and get the network as wide as possible, right?
Yeah. I mean, you always have to start with what you need, but I think a very close second for what you want to have covered should be the unknown. Having the insurance cover you for the things you already know you need, that's more convenience than anything. We really need to reframe this as, yeah, health insurance is expensive. I understand that. We can get it a little bit cheaper if we're willing to think about it in a different way. But the main reason we've got this health insurance is for the unknown. So when we're talking about networks and companies and marketplace and individual and all that, we really need to get that network as broad as possible, in my opinion, to lower the risk as much as possible for you. Because just as the insurance company needs to calculate their risk in order to make money, you should be calculating your risk. If you're on a narrow network HMO just because it covers your doctor down the street and the prescription that you take, and you don't want to think even a step further about that, that's okay. But understand that if you need medical care outside of that network, you have unlimited risk for healthcare expenses. That's a big risk. I'd rather not have that. So look at the networks, look at the companies, look at what you need, but a very, very close second should be the unknown. And how do we make your financial liability for an unknown healthcare expense as low as possible? That's always my goal.
Yeah. No, that makes sense to me. So bigger company equals bigger network?
No. Typically the bigger companies, they got marketing budgets. Yeah. And they got to pay for those. And so they're not really reimbursing doctors all that well. Like a famous example, not to get too many insurance companies pissed off, but Delta Dental. Holy cow. The amount of people who have Delta Dental through their work is astronomical, and they love it because these group Delta Dental plans are fantastic. And almost every dentist takes it. When you get to the individual side, though, these Delta Dental plans suck, and barely any dentists take them because they're super expensive, they barely pay out, and it's just kind of a nightmare to work with. So even the larger name companies, once you get to the individual side, you can find a lot of restrictions, and it does not mean, if Dr. Johnson accepts Delta Dental, you better call and make sure they accept Delta Dental individual plans, not just the Premier Gold that you get through your job. Because if you walk in there with the individual, he might laugh you right out of his shop.
Interesting. Mm-hmm. If it's expensive, it must be better.
If it's expensive, it must be better. God, is that true for anything? I mean, just unilaterally. I don't think that's true for anything. It certainly isn't for health insurance. But if you do go the opposite way, it's absolutely the case. If you try to cheap out on health insurance, you're going to get what you pay for. No doubt about it. It might work cool for, I get this prescription for that amount, or, man, I went to urgent care and it was only $50. All right, cool. What if you got hit by a train? What would it do? Do you even know? Because likely it's going to come up really short if you skimped out on your health insurance premium to save a couple bucks. Yeah.
I think the last misconception that I saw is a bronze plan's a bronze plan, a silver plan's a silver plan. It's all apples to apples.
Oh boy. Yeah. It's not really apples to apples. And I think the more common misconception is that going from bronze to silver is improving your situation.
Yeah.
And going from silver to gold is really improving your situation, when it's just not the case. Almost every single person I ever sign up for a marketplace plan gets a bronze. The only ones who are getting a silver are the ones that also qualify for a cost-sharing reduction, which is meaning your household income is below 250% of the federal poverty line, because then you get better deductibles and everything, so then we'll throw you on a silver. And very, very few get a gold plan. It's almost if they're stomping their feet because they want it. And I say, okay, fine, you can have the gold plan. But it typically is not worth it. You typically just want the bronze. You just want something there for the big stuff. And that extra money that you would pay from going from bronze to silver or silver to gold, get a supplement that covers you outside the network. Because when you go from bronze HMO to silver HMO to gold HMO, your network is still the same. You might have a better deductible. You might have a better copay. But that same fancy doctor that didn't take your bronze HMO is not taking your gold HMO. The Mayo Clinic still isn't let you show up just because your card says gold on it. Instead, take that extra money that you would have spent going from bronze to gold and buy a supplement that actually gets you access to these other places. It covers you when you're on vacation. It covers you at the Mayo Clinic. These options exist. Please look into them.
I think that's it.
Have I gotten on my soapbox enough on this one?
I feel like I've teed you up to do what you do best.
There we go. All right. Well, that was some real talking shit.
Yes, it is. That is how to look beyond the carrier, the company, the brand, and dig in deeper to what matters.
Love it.
That'd be a good podcast name for you. What matters?
What matters? Oh, because of my name?
Could be, yeah.
Hey, love this.
All right. This has been another episode of Talking Shit, and we will catch you next time.
Peace.